If I gave you 1 second to make $1 million, would you do it? Yeah, I thought so. Well, stop ruining my videos with your constant commenting. And here's why. Now look at this article from Business Insider. It says that $32 billion has been wiped out from the value of AI companies in just 2 days after the release of Chat. That is absolutely insane. But the craziest part of the story is that OpenAI, the company behind Chat, was valued at $86 billion before the launch of Chat, and now it's worth $47 billion. So basically they lost half of their net worth, which is crazy. Now some people might say that the stock market is always going up and down, and this is anything unusual. But this isn't normal. You can see that there was a big dip right here, which means that investors are selling their stocks, and then another dip right here where investors are selling even more. So this isn't some natural fluctuation in price. This is because something big just happened, and that is the release of ChatGPT. And when I say something big, I mean really big. For example, Google's parent company, Alphabet, saw their value drop by $100 billion in a single day, which is the biggest one-day drop in stock value in history. And Microsoft, which invested billions into OpenAI, saw their value drop by $200 billion. So why is this happening? Why is the entire industry crashing while OpenAI is growing? Well, we need to understand what OpenAI actually does and how much money they're making. So first of all, OpenAI is an AI company like Google and Microsoft, except that they focus on building AI models. In other words, they train the algorithms to think like humans. They built DALL-E, which creates images based on text descriptions. They built InstructGPT, which can follow instructions and perform tasks like answering questions or summarizing text. And most recently, they built Chat, which is a conversational chatbot. All of these models run on top of gigantic data centers full of expensive computer equipment. In fact, training one of these models costs tens of millions of dollars and requires hundreds of thousands of high-powered GPS. But once they're trained, they don't cost much to operate, and they bring in a ton of revenue. The problem is that none of these companies are making money yet. Google's search engine brings in about $280 billion per year, and Microsoft Office brings in about $190 billion per year. But OpenAI only brings in about $28 million per year. So obviously OpenAI isn't making as much money as the tech giants yet, but they have potential. ChatGPT is the most popular app in the world right now with over 1 million users within 5 days of launch. And OpenAI says that they're making around 2 million requests per day. This means that Chat could be bigger than Instagram, which gets around 1 billion monthly active users and around 60 million daily active users. It also means that Chat could be bigger than Twitter, which has around 450 million monthly active users and around 200 million daily active users. And it also means that Chat could be bigger than TikTok, which has around 1 billion monthly active users and around 120 million daily active users. So if Chat continues growing at this rate, OpenAI will be pulling in billions of dollars per year in no time. But investors seem to be ignoring this. They're looking at the competition, and more specifically, they're looking at Google. You see, Google was the first company to introduce an AI chatbot called Bard, except that their launch was not nearly as successful as OpenAI's. For example, their website crashed due to high traffic and many users couldn't access it. On top of that, one of the demos on their website was factually incorrect. Basically, Google messed up their launch, and this made investors worried. If Google, the biggest company in the world with the most resources and the best engineers, can't compete with OpenAI, then maybe OpenAI doesn't have as much potential as they thought. This led to investors dumping their stocks, and this caused the crash. Now some people might say that this is a good thing because it gives smaller investors a chance to get in on the action, but it's not that simple. Just look at AMC. Their stock price went from $1 to $20 per share during the meme stock mania, but now it's trading for around $2 per share. This means that most investors who bought in at the peak lost 90% of their money, and this is why it's dangerous. Most retail investors aren't sophisticated enough to evaluate a company's true potential. They just see what everyone else is doing and copy them. For example, during the dot-com bubble, individual investors poured $100 billion into internet companies each month. And during the housing bubble, they poured $60 billion into real estate investment trusts every month. But this didn't make them rich. It made them victims of bubbles. But there is a way to avoid this. You just need to know where to look. For example, you could look at what billionaires are buying because they're sophisticated investors who built massive empires. And unlike retail investors, they don't care about short-term volatility. They care about long-term growth. In fact, billionaires are buying up real estate at record rates. They're snapping up mansions, apartment complexes, and even entire cities. And if you want to get in on this, you're gonna want to listen to this next part very carefully. A few years ago, I talked about a project called Brick Kung Fu and Yatsurketi der Sign in Herkatming Control Ediyor. They buy the land, they build the buildings, and then they rent it back to whoever lives or works there. And it turns out that this is a great business model because they have total control over their assets and they can keep raising rents. But the problem is that this takes a lot of capital and most people don't have hundreds of millions lying around. But that's why they're creating Fundrise. They're essentially crowdfunding real estate investments so that anyone can invest like a billionaire. Now in the past, this wasn't possible because minimum investment requirements were too high and the paperwork was too complicated. But now anyone can open an account and invest in seconds. And unlike REITs, you won't have to worry about property managers or tenants to deal with. And unlike the stock market, you'll be investing in actual assets that have real value. They've already built a $1.6 billion real estate portfolio, and their goal is to grow that to $100 billion. But the best part is that there's no minimum investment requirement. You can start with as little as $5 and diversify across dozens of properties in seconds. So sign up today and start building wealth like a billionaire. But you should hurry because this offer won't last forever.